right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's go ahead and get started with our analysis. I'm going to grab the bias chart really fast. And we're going to start with the euro dollar. Yeah, let me get over to the euro. And whoops. Let's take a closer look at the euro dollar here. So yesterday, we had this, let's go ahead and take a look at what we had as far as a flag pattern. Okay. So we had this flag pattern, and for the most part, you know, I guess you could have drawn it like that. We came really close to the target. Okay, down to 109.50. We got to 109.63. So here we are currently, and I'm going to go ahead and delete this drawing, remove, because we can just start over again. So here's the euro post Greek deal. Kind of see where we're trading. Overall, I still think the euro is trading very heavy here, and it's a very heavy trading currency. But at this point, you can see there is some support that's forming down here, and here's your 4-hour chart. And I think what we have to do is just kind of look at the broader brush strokes right now, and look at it something like this, okay, and notice that there's a pretty big consolidation going on. We might need a catalyst to drive us lower at this point. I don't know if the Greek situation was just it, but I would suspect that if we drop below yesterday's lows, or the lows that following this whole situation has been happening in Greece, below 109.25, that's what's really going to get the downside started in the euro. So my 2 cents is you have to be extremely cautious down here. I shorted some euro dollar at 25. Personally, I'm only in a half size position. I'm not going to risk a whole lot here. I'm not too comfortable with it, and I won't be until we start getting down into the 109, 109.50s. Then I'll start considering pushing a little bit. But really, below 109.25, this is where the euro turns bearish again, in my opinion. Okay, and then we have some distance to go, where we could, push down to some support down at 107 or so. Okay, but for right now, the euro is trading pretty heavy. We got a little bounce, as you've seen. We could probably bounce a little bit further too. So let's try to figure out where that, where that bounce could lead us to. Once we got the deal in Greece, there's your high, there's your spike high, there's your low. 38% retracement takes us up to 110.55. So if we get to 110.55, that could be a decent area to be on the short side. That's also a 38% retracement if we get up there. Okay, so I think that's going to be pretty good resistance today. 110.55. You guys want to get on the short side? Probably not a bad place to be on the short side there. We are still in a range environment. Until we start breaking through this 109.25 down here, we're in a range environment. We start breaking through that 109.25, and it's going to start exposing some, putting some downside pressure in the euro, in my opinion. Okay, but not until then. There are still traders that are trading the, hey, we had a positive Greek deal, we should be buying the euro here. And there's still going to be those types of buyers lingering around the market. We're going to have to start to see some strong downside, like I said, below 109.25 to really get the downside momentum picking up again. All right, now support for today is going to be today's lows, which will come in at 60. Today's low 63. 64. Okay, so 109. So there's two support levels, 1.0925, 1.0965. I want to make sure 25 is the right number. What's the spike low here? 15. Sorry, it's 15. Okay. So those are two significant support levels for the euro dollar at this moment. Like I said, I'm short right here at 110.25, and it's only a half size position. I'm not sweating it. Like I said, I don't mind having short exposure in the euro at these levels. I don't mind adding a little higher too if I have to. Let's go look at the cable. So the pound obviously spiked up on some very hawkish comments from the Bank of England. And like I said, I was short the pound New Zealand. I was only in a little third size short position last night, and I got stopped out. I was like, man, but like I said, I don't mind getting stopped out as long as I get stopped out early. It would have really ticked me off if I was, you know, aggressively shorting the pound New Zealand and then got stopped out. But that wasn't the case. So here's the cable, and you can see struggling right up here at the 156 level. That's obviously resistance. We've been as high as 156.02. So 156 seems to be good resistance, but let me double check one thing. So let's remove this fib, and I'm going to remove these blue lines, by the way. Let's get rid of those. Let's get rid of that. Let's get rid of that. Okay, so if we go from the highs over here to the low in this channel, 38% retracement. There is the 50% retracement. It comes up at 156.30, but you know what? I'm going to write down that number. Okay, so we have two resistance levels for the cable. 156, 156.30 that you have to be aware of. Okay. Support. It's obvious now. Support's right here. Because you have to imagine if you were on the short side of the cable, okay, you were on the short side of the cable overnight, and it was, you know, dropping down here towards 154.60, okay, and you're like, oh yeah, you know, we're breaking down, and then we got this spike up. You're going to be happy if it gets back down there again. You're going to be like, thank God, you know, got back to my entry. Just get me out of this thing. If you're on the short side of the cable right now, okay. So I think any dip down now to and we had support yesterday written down at 154.90, which was, you know, right through here. And we started to crack through that, and you can imagine, you know, we were looking at this support yesterday. We're like, okay, you know, 154.90, or 80, or forget what number we wrote down. Oh yeah, we're starting to drift lower. We're starting to break lower. You know, people in Asia might have been shorting a little bit of cable, thinking, oh yeah, this is it. Now, because of the comments from the Bank of England, really stuffed the shorts. So now anybody who's short is going to be happy if we get back down to 154.60, plain and simple. So that is going to be pretty good support today, 154.60. Okay, if we get down there, and that's a big if. You know, I don't think I'm thinking personally. Actually, you know what? I should probably do this. I actually don't even think we're going to make it down there. I think if we get back to 154.90, it's probably going to be good support for today. You know, because you imagine, look at the hourly charts. Remember when we fell through this support yesterday? That capped us. Then see how it capped us. This hourly chart, see how it just kind of kept us. So on any dip now, it'll probably be really well supported right there. Okay. All right, let's go take a look at the, excuse me, the Swissy. So I'm still long the Swissy. I'm long, my cost average is 94.63, and I'm still hanging on to it. Now, as I mentioned yesterday, we were two big levels that we've got. Okay, and I was watching it last night. I went to go eat pizza. My kids went to go see a movie. We met the lady who took my kids to go see a movie, and we went out to have pizza. Um, you know Ziggy, who makes the recordings for the Morning Edge. When he was moving from Las Vegas to New York, him and I had lunch at this place called the Pita Jungle uh, in Scottsdale. This restaurant. It's called Pita Jungle. It's a chain now. It's a chain in Phoenix. I think they're only in Phoenix. Anyway, we had lunch there, and right next door is this pizza place. So I went to the pizza place last night, and I was watching the Swissy, and the Swissy is ripping up towards resistance, and I'm like, oh man, I hate it when that crap happens in Asian trade. Because it was trying to break out here, but I knew key resistance is at 95.40. So we got up into the 95.20s, and I'm thinking, yeah, that ain't gonna hold. Yeah, I didn't get out because I'm looking at you know the Swissy as a longer term you know breakout because let me just reiterate something if you guys wonder why I'm long the Swiss pairs. It's because the Swiss National Bank has rates at negative 0.75%. That means if you're an institution or you're a bank, you're paying the Swiss National Bank three-quarters of a basis point to hold your money in Swiss francs. If you want to enjoy the safety of the Swiss franc, you have to pay that interest annually. Institutions, remember, if you're an institution and you're just shooting to make 6% annually, you know, just to stay in line with just to make sure your clients are happy, and you just need a 5, 6, 7% return annually. If you have to pay nearly 1% a year holding your money in Swiss francs, hell to the no, I'm not doing that. So institutions will only hold Swiss francs long for so long. Once they get the coast is clear, they're going to get out of those Swiss francs. They don't want to hold them. It's one thing about having preservation of capital through a crisis like Greece, but if you got the coast is clear, okay, Greece, we moved past it. Greece is going to be fine, even if it's just for the next 6 months to a year, which I think is realistic. Greece is probably new government 6 months from now or a year from now is probably going to start raising a ruckus again. But that's not here or now. That's 6 months from now or a year from now. You're probably going to get trade or institutions getting out of Swiss francs. So that's why I don't mind being on the long side here. But really, the breakout is above 95.40, and not until then. So I've got, for me, I've only got a half-size position. I am looking to add, but I need a breakout. I want to see the dollar making sure it's making some headway up here. And yesterday it came really close, and I'm like, it's in Asia, it's not going to do it. And I was right thinking that. But anyway, as long as we stay above 94 cents, still supported. 94 and 0.9540 asterisk because that is so important. We're in a range until we can start busting out. Dollar yen. So, like I said, the dollar yen, I said this earlier, the dollar yen, it's very tempting to short it. It really is. I'm very tempted to short it. I'm not going to short it, but I'm tempted to short it because I'm not going to short it because I don't want to bet against the U.S. consumer on a retail sales number day. Retail sales in the U.S., I don't know what the actual number is, but I'd probably have to venture to guess that we exceed upside expectations more often than not. Okay, so whatever the expectations of retail sales are, I would venture to guess that we probably beat those numbers more times than we disappoint. Why? Because Americans like to spend money, and they're not shy doing it. And with inflation, wage inflation, or with higher wages that we're seeing here in the U.S., the American consumer unfortunately just doesn't save. Yeah, and I obviously talk about that on a broad sense. I'm not talking about obviously every American out there. I'm just talking about you know the average American. They're just going to spend what they have, which is crazy, but they do. Anyway, so with that being said, I don't like to be on the short side of the, especially dollar yen that's so sensitive to retail sales. I don't like to be on the short side of the dollar yen ahead of retail sales. Now, if we get a miss, that's great because what we've done is we've solidified a double top here, okay, at the 618 retracement, okay. We solidified a double top, and that's great. We also have a gap fill that comes in at 123. What is the close here? 120. Whoops. 123.87. So basically, let's call it 123.90. Okay, so there's two resistance levels. 123.70, roughly. 123.90. Okay, we are obviously still in a range. If we get a beat, retail sales beat, the dollar yen is likely to go back towards those highs. Even if it doesn't fill the gap completely, it's at least it's going to come back up and retest those levels. Now, this is valid from today, from yesterday, but I'm going to just move it over. Okay, if we miss, there's a good shot that we come back down and we test, let's just call it 122.70. Okay. Oops. And if we miss, this is probably going to be a good short here with the dollar yen, knowing that you have stops above 123.70, 123.80. Like I said, I'm tempted to do it, but yeah, with retail sales, in 40 minutes, so we're going to get some volatility there, and the dollar yen is going to be most sensitive to the retail sales move. Let's go take a look at the Canadian. So here's the Canadian, and what's interesting about the Canadian? If you look at the dollar Canadian, it's come down a little bit, but look at crude oil. Crude was down 2%. Iranian deal got signed, sealed, and delivered, whatever. Crude was down 2%, now it's down 1%. So crude's bouncing, right? Crude oil is bouncing. The dollar Canadian isn't pulling back because crude oil got the, sell the rumor, buy the news. Dollar Canadian's holding up pretty well. I really don't want to see the dollar Canadian rally here, and somebody asked me a little earlier, and I'm not too sure who did, and I'll go back and field the question a little bit later. And hey, how much more do we expect in the dollar Canadian? The 4-hour chart is diverging. It is diverging really good, and I'm frankly I don't expect the dollar Canadian to continue to move up, but it doesn't mean it's not going to. I mean, if you ever want to see a currency move higher when you have a divergent relative strength, go look at the dollar yen when it moved from 82 yen to 100 yen, and go look at the 4-hour chart through that whole move. It pretty much diverged the whole time on relative strength, but it still kept going up. Okay, the Bank of England tomorrow, or Bank of Canada tomorrow's. Economists are now starting to believe that they're going to actually cut rates tomorrow. And I believe that the dollar Canadian, if they cut rates, that could be the catalyst that drives the dollar Canadian above above 130 in the near term. So we've got to really keep an eye on the dollar Canadian. I don't think it's going to move before the rate decision, but it might. It might. Okay, so anyway, there's the 4 hour, very divergent relative strength. Really critical resistance comes in at 128.30. 128.30, huge resistance. 1.2830. And I'm still long, and I like being on the long side. Okay, it's bullish. Support today. Okay, you think about it from somebody who's short, like, somebody who's short's thinking the exact same thing with that 4 hour. Oh my God, that 4 hour chart's diverging. Thank God. Please let this thing drop a little bit so I can get out, because it looks like it's breaking out, right? So any dip now down to 127, well, 127.45 is the low here. So any dip down to 127.50, there's probably going to be some buyers there. People are going to gladly cover their shorts because they're watching that trade go up in their face. So if it comes down to 127.50, they're probably going to be like, get me out of that damn thing, right? So any dip down here is probably going to be pretty well supported today. We break through 127.50, and that's going to shift that's probably the bull bear line, if you will. Okay. But if not, it's a nice pivot area, especially for those of you that want to be on the long side. If you want to be on the long side, you wait for a dip to 127.50, you buy it down there, and then you put maybe in a 20 pip stop. Good risk reward down here to be on the long side. You buy it down here, put in a stop. If you get stopped out, at least it's a smaller loss. Here's the kiwi. Okay, the kiwi, as long as it's below 67, let's just call it 67.50. As long as it's below 67.50, it is bearish. And it seems like just a matter of time before we're testing 66.30. Okay. Let's take a look at, I'm going to do the Aussie really quick before we go on break. Here's the Aussie dollar. And the Aussie dollar had, good business confidence numbers, which pushed us off the lows, which is really, you can see how we're just wedging here in the Aussie. But man, these bounces are really shallow. Obviously, key supports at 73.75. 73.75 key support, because that's multi-year lows if we drop below there. And then resistance now is 74.90. And it's still bearish. Okay, when I come back, we will do the dollar index. We'll take a look at the Nordic currencies, and then I'll answer your questions. Don't go anywhere. I'll be back shortly. And crude oil is bouncing. Look at that. Sanjeev says now oil's up on the day. Crude's almost positive on the day. Probably it was just positive. Short the rumor, buy the news. I'll be right back.